Inflation has made a lot of people's lifestyles really expensive, including mine. So credit filled the gap. I was just on the line today with one of our members at Contrarian Thinking. He owns a restaurant. His food costs have gone up 300% in the last 18 months. And on top of that, the market is more concentrated than ever in just like a few big companies. So of course, investors, anybody trying to make money, we don't feel great. And you probably shouldn't. One of the clearest warning signs right now is leverage, so debt. That means more stocks are being bought with other people's money, borrowed money, than at almost any point in modern history. Margin debt, which is especially scary, that's where you can buy things on somebody else's balance sheet, has outpaced the growth of the whole market for decades. Meaning a lot of the stuff that's happening with today's huge valuation is actually built on borrowed cash, money people don't even have. Now, Buffett, he don't like it. He's warned about this repeatedly. He's pretty blunt, actually. He's like, anything can happen in markets, which is why you never borrow money against securities. I agree. I think fuck stocks, actually. Leverage doesn't magnify you. It magnifies all your mistakes. So when too much debt floods the market, prices stop reflecting reality. They get artificially inflated, and then volatility, so upside, downside movement increases. And we're seeing that right now. When I was at Wall Street, you would measure something called the VIX. And it's Wall Street's, you could call it a fear gauge. And it basically signals how investors feel, good, bad, scared, freaked out. And right now, that thing is spiking, meaning people are freaked out. So what does Buffett and the smartest investors in the world, what do they do when things get overheated? Well, let me tell you what he doesn't do. Stare at stock prices at all. He ignores them. He looks at businesses. One of his first rules is so simple. If you're just looking at the price, you're not investing, you're speculating. Real investing, it actually starts with the business itself, how it makes money, how durable it is what he would say, and whether it'll still matter 10 years from now. Like a lot of these AI startups, they're going to be like, gone, right? Every overheated market follows the same script. People stop buying businesses and start flipping tickers. They don't care about what the company is worth. They care what somebody else might pay for it tomorrow. It's called the next idiot theory. And that's how bubbles form. I think we're in one right now. And if you haven't studied the underlying businesses that you're looking at, you have no idea whether a stock is expensive or cheap. I swear I'm going to stop talking about stocks here in a second. My takeaway is simply this. Most people, especially if they're talking to you right now, are giving you a lot of opinions. You don't need more opinions on things to invest in. You don't need a next hot deal. You need fewer decisions. And the edge really in investing isn't speed. It's things you don't fucking do or restraint. So the best investors win by not being active all the time, being selective. They think, they learn. And when they act with conviction. So I want to think about it this way. You know, the thing is, wealthy people think differently. The wealthiest people in the world, they get their riches, not from trading their time for money, but by becoming either fractional, so part of, or sole owners of cash flowing businesses. You know, it's not going to be your Elons or your Jeff Bezoses, although in many ways those do too. These are business owners like the Koch brothers, some of the richest family in the world, off of things like toilet paper, Wayne Huizenga, garbage trucks. And what you might not know is there is a groundswell of people quietly building their wealth by finding, buying, investing in Main Street reliable businesses. No glitz, all cash flow. Because I want you to remember one of my favorite quotes from Sam Altman, although he kind of does look like a lizard. He scares me slightly. He is also the founder of ChatGPT. He says, the biggest economic misunderstanding of my childhood was that people get rich from high salaries. Though there are some exceptions, almost no one in the history of the Forbes list has gotten there with a salary. You get rich by owning things. So then the question is like, how do you do that? Well, you learn how to buy parts of businesses privately. You don't even have to leave your job to do it. In fact, I didn't. Building ownership isn't one skill. Scott Adams would say, rest in peace, that it is a broad stack of skills. You need to know how to find the right opportunities or even see them. You got to know how to look at the numbers and see if they make sense. You got to figure out how to get the money to buy it or whether you should put your money in. And then you got to negotiate terms. And if you own the business outright, you operate it. If you don't worry about that. And then eventually the cool part is like you'll sell down the road, potentially getting a big exit after you're done with this business. And so like this is an essential skill today. If you're in a W-2, inflation is eating away at your wages while AI is eating away at your role. You know, negotiating equity, profit sharing, ownership stakes, you got to do it. It's really important. And if you're looking to buy your first business, you need to learn how to do all of these things. And you need to know that often the growth comes from not within, but from acquiring competitors in your business, from doing deals with other people in complementary businesses. Buffett would say, volatility is not risk. Risk is not knowing what you're doing, which you're like, no shit. The truth is, like, we don't have to worry so much about the market when we're in private markets, because the businesses that we're investing in, they're not day trading assets. And here's why this matters so much right now, today. Look at the job market. It's like musical chairs. Even if you still got a chair, these aren't your grandpa's sturdy oak rockers, right? They're $2.99 folding chairs from Alibaba, which I can tell you firsthand, that's not a good thing. One algorithm change, one AI update, one earnings miss, and they collapse. So how do you diversify your income streams? You own lots of things. I think we are in an asset ownership race with AI right now in a way that we don't even realize. Buying businesses and owning parts of businesses will be like getting on the last lifeboat out of the Titanic. You will either be the person who owns the farm, or you'll be the donkey that the farmer told, don't worry, that tractor is not going to take your job. Donkeys are just going to be in charge of the tractors, and the tractors are going to do all the work, and the donkeys are going to hang out. Except for a lot of us, it is going to take over. I was on Wall Street, and I was watching all my peers chase fractional shares of massive corporations they didn't control. Meanwhile, I saw these guys over here called private equity, really smart guys, and they were snapping up small, profitable local businesses because they realized what I didn't at the time was that nothing beats cash flow. You know, if you go invest in the stock market, do you ever get like a huge check from your stock market investments each week? No. So that realization led me to change a lot of my life. I invested, I built up cash flow. My cash flow replaced my income. I would have kept that job forever, except my boss was a dick. I don't know if you can ever relate. So I quit my job. I started buying more unsexy businesses. My first was a laundromat. And I started stacking ownership, because it doesn't have to be glamorous, even though we see it that way. You just stop asking for permission to get ahead, and you make the moves that will actually get you ahead. And that shift changed everything in my life.